Hey everybody, Ben Engelman here with Friedrich Realty and the Engelman team. Just wanted to give you a quick market update for the month of August for 2023. So our market is definitely slowing down this time of year. Like I've said in the last couple of videos, slows down through August, season's changing, going back to school, football starting, right? So now everybody's getting settled in, but we'll go through what numbers look like in August versus July versus a year ago, and obviously the past 4 years as well. So we jump right into it here. Hope everybody had a great Labor Day weekend and stayed cool. It got pretty hot there for a couple days. So when we look at active listings, definitely just staying flat. And what you're going to see here is not a lot of new listings coming on the market, which is what you see through August anyway. But we definitely had a down July, from past years with new listings. So when we break over to the other page of what the numbers are actually doing and what's on the market, you'll see that those numbers are falling a little bit just because there's no houses that are filling those spots. So, or not as many, more pendings going out the door than anything. So, but when you look at active listings, new listings, closed listings, ending the month, 89, 47 new listings, closed at 66. Last month at 46 is definitely low, but 66, I believe, is the exact same number we had last year. So the last 2 years, 66 closings in August. So, but you can see that the big dip down here. But what we're going to basically see is monthly closings are going to drop a little bit more than likely. Market is a little bit strange, so it could tick up a little, but more than likely it's going to go down a little bit. So when we look at new listings over the last 5 years now, definitely see that number trending down. It's going to keep trending down where we get into November, December, and we're getting under 50 listings, in those winter months. So looking at days on market, still very low. That means the buyer pool's for sure still there compared to 19 and 20. We're still way below that for what it is normally. So you're still in a definite seller's market, but it doesn't seem that way because we got so used to these low numbers of houses and houses selling in a day to 5 days. They might sit a little bit longer, but still definitely a seller's market. When you look at absorption rate, we're finally sticking above 2, almost 2.25 months, which is really good for the market. I think it makes it for a little bit more healthy market when it comes to the balance between buyers and sellers out there. So I think you could definitely see that start to drop as more pendings go and then fewer listings come on. So I think just like we saw here, and even back through in 21, I think we're gonna see that number come down a little bit more. When you're looking at the sale price or the sold price to the list price ratio, we dip down a little bit here through the summer months. Usually when that happens, you can see it normally happens in 2020. It was a little bit of an anomaly because interest rates hit the floor, so demand went way up. But when you're really looking at this, your peak market is going to be that March, April, May. And so that's your biggest buyer pool. You're going to get the most for your house. So that's not a secret to anybody. And then nationally, over, the last 20, 30 years, from your spring market to your winter market in markets around the United States, it's about 2 to 2.1% drop that you're going to have in your home. Obviously, real estate's local, so that can change. But we're seeing that where people, and it's not that they're getting greedy, it's that, hey, well, this is what the market was doing 3-4 months ago. And so this is where houses are comping out at. Well, your buyer pool has dropped quite a bit. So now if they're needing to move, if they're wanting to move, they might have to come down on that price point a little bit. In those houses that sat through some of this peak time that maybe were overpriced are having to have a little bit of a correction. So healthy, I think this is healthy to see, and it kind of gets people's, a little bit more into reality of what things are. So when you look over in the weekly, what's going on a weekly level, here we're looking at, here's where we ended with the 66 closings this month, the 35 pendings. So that 35 is definitely going to be low, assuming a lot of those close, September, part of October. So we'll see what this first part of September does to the market. Usually it picks up. There's a little bit of an uptick after this weekend, after the Iowa State game. So be aware of that. We're already seeing a couple more houses come on the market even this week after the holiday weekend. But when you look at resale, we're down to 55 homes, 6 townhomes, which I believe that number is going to drop a little bit as well after this week. But we're looking at 49 single family homes and then 19 new construction. That new construction number is the one that scares me a little bit. I think that number needs to get up for what's going to happen in the spring. If these interest rates come down and they come down anywhere in the 5s, the single family, this single family number could, yes, potentially go up, but it's going to drop quick because pendings are going to go up because people are going to start to move again and sell their homes, list their homes, and it's going to speed things up quite a bit, and prices are in turn going to go up as well. But that new construction, if people have an outlet as that number starts to go up, that's going to stop some of that pressure on the resale market going up so quickly. But nationwide, the market's up 5%. So all these narratives of interest rates are at 7.5, people aren't moving. Some of these big metropolitan areas, listings are up 100%, 200%, 300%. It's just not the case everywhere. And even in some of those markets, the resale homes are still up, 3 to 5%. So you're still getting decent gains on your home. But the one big issue is with the interest rates between 7 and 7.5, the buyer pool shrunk. The buying power of each one of those people shrunk compared to a year ago. If you go back 2 years, all of a sudden you're looking at, people's buying power is down 40%. And so that definitely affects it. So your lower end market is going to continue to be very, very healthy, and extreme seller's market. The higher end, it gets a little bit different, but stay tuned and I'll update you as I know more. And if anything changes, I'll definitely let you know. But have a great day and enjoy your week. Go Cyclones.